Welcome back. You're still tuned into Business Lunch, and here's an important story. The insurance regulator IRDAI has cleared commission regulations for life, general and health insurance players. So Yash is here to tell us more about that. Hi Yash.
Well, certainly this is a big positive development for all three segments of insurance sector: life, general and standalone health insurance companies. The insurance regulatory body, that is IRDAI, as well as the government together have cleared the commission regulations for insurance companies, all three segments. Before we start talking about the story, essentially there are two segments to this. One is commission, which insurance companies pay on the sale of insurance policies, and the second one is expenses of management. Expenses of management is nothing but a sum total of commission and the operating expenses excluding commission which insurance companies have. Now, what the insurance regulator said is that we remove segmental limits on commission from different segments of business, be it motor, health, so on and so forth, and we put a master limit in the form of expenses of management. The commission limit has to remain under the master limit of the expenses of management, which means if the commission limit, if the expenses of management limit is 30 rupees, the companies will decide whether to spend 25 rupees in terms of commission and 5 rupees in terms of other operating expenses or not. So that will be left to the company. I'm sorry, it's a big positive for insurance companies and for web aggregators like Policy Bazaar, since they will get higher commission out of this particular regulation.
Right, there are important development there, Yash, and a lot of companies competing in this space could really push up the commission component since there is just a master slab there. But Yash, also an important development, and break it down for us. The EPFO has hiked the interest rates for the first time since FY19 with a payout of 8.15% in FY23. So definitely a good news for salaried people like you and me.
Well, absolutely. Not a lot to cheer about since the difference is very small. But nevertheless, the street and experts were expecting a status quo as far as the EPF interest rate is concerned, or even a cut. Contrary to that, what has happened is that it has been raised by about 5 basis points. The interest rate, EPF interest rate for FY23 has been fixed at 8.15% instead of 8.1%, which was for the previous financial year, that is FY22. Now, this 8.15% interest, what does it mean? Essentially, through this particular increase, EPFO will be transferring an amount of about 90,000 crore for the year FY23 to all its subscribers. This compares to about 77,500 crores done in the previous year. EPFO's principal, that is the amount accumulated through the contribution, has also grown by about 15%. Look at the investment. EPFO invests about 15% in equity markets, Sensex and Nifty ETF. Both of them are down mildly in the red. This particular increase of 5 basis points has only come on the back of the bond or the fixed income portfolio.
All right, Yash, thanks a lot for bringing us the details on both of those important stories. But with that, let's move on, because we at News 18 Network are excited to announce the third edition of Rising India, the